Welcome to Momentum Monday. Today is February 21st, 2021. Howard, back to Coronado. Which
productivity change, had to change up scenery. 4 months in the same place with people were getting, tensions were high.
Yeah, I can see that.
What can you see? How would you know?
I can imagine,
Look at Ivan just dig deep. Did you enjoy having Brian on last week?
Yeah, as I said, Brian is very smart. There's always something to learn from him. So yes.
All right, we'll have that once a month at least, a special guest. Today the special guest is just Ivan's pretty face. And all the pretty charts, because it's a heavenly market. Give us the rundown.
I mean, last week was basically a showdown of rising inflation expectations. If you take a look at the charts of any of the industrial metals, I mean, the XME, the ETF was up 4% on Friday alone. And then all of the copper stocks were up 10, 15%. And the same with steel. And any industrial metal that you can think of, gold is the only one that's pulling back and underperforming.
Yeah, wow. That's going to need a really big move to get going.
Basically, anything related to rising inflation expectation, like interest rates, potash.
You would think gold would work. Bitcoin's worked. Anything with limited supply.
Yeah, you would think so, but no. And this is the funny thing about gold, that it didn't really work as a protection during the pullback in early 2020. And then it's not really working as a inflation hedge during period of rising inflation expectations, when you have steel and copper kicking the ass of gold. Basically, I mean, gold is basically here close to a breakdown. And at the same time, all of the back to normal stocks continue to show relative strength. We're talking about anything related to leisure, airlines, hotels, restaurants, casinos, even the cruise ship, which don't even work at this point. They had a big breakout. This is a weekly chart. All the airlines, obviously mostly US airlines, is probably the market expects that the Western world is going to do a better job with vaccinations. So the tourism is going to go back there quicker. So this is what, I mean, as of right now, it doesn't seem like, it seems to be a bit counterintuitive that all the airlines and restaurants are going up, but the market often thinks 6 to 12 months ahead. And I don't know if this story is going to be confirmed by the actual fact, 6 to 12 months, but right now the market is discounting going back to normal later this year.
Yeah.
But
if we look at some of the COVID stocks like DocuSign, you can see that in Zoom, they aren't crashing. DocuSign, this was the leader coming into COVID, like the first month of COVID. If we look at Zoom, also holding in there. And so they don't look like companies that have had so much gains that no one. So as the airlines and hotels and all the stocks that I could care less about. I mean, look at casinos, look at MGM. That's one that I've been long and talking about on the streams, not in my main portfolios, but they have an MGM bets division that actually my friend Ryan Spoon runs. I mean, so they really aren't a casino company anymore. And you can see the great rise there as MGM Bets competes with DraftKings. It's a poor man's DraftKings and a poor man's Barstool, Penn. But I think MGM, what people don't know is, I mean, the product's amazing. I'm not a sports gambler, but if you look at the MGM compared to other casinos, you can see why.
there he is. Yeah.
you can see why it's outperforming, and they have a great product. They can do all kinds of cross promotions. So I don't think that story has been out there. So I mean, other than MGM, I just don't. And I was playing that Simon Properties that I finally just said enough. I'm out. Like there's just pricing in. I mean, not that it's a bad company. I'm just done with the run. But it looks like very bullish setup, over 100 with the market still closed. But you know, as it comes into those all-time higher, I just think, God bless if it just goes ballistic straight up. But there is so much work to be done repurposing these malls. You know, Fashion Square in Phoenix, Apple's, it was their anchor tenant, and then just basically shut down because of the riot in Scottsdale. I mean, so I don't feel like, you know, after 100% move off the bottoms, that those are my best plays. So if we go back to growth, I still think people want to pay 20 to 100 times sales for these things. You can't judge it. And the small caps have sneakily led here, as you can see. I mean, just not a pullback, huh?
Every little pullback to the 20 days has been a buying opportunity. And in the meantime, all the FANGs are actually struggling. Probably money going out of FANGs, going into small caps that have better potential to appreciate in the short term.
I have this thesis that I've, you know, it really, it's only that you own the FANGs as your index play, right? So you don't need to own the S&P. You can own the FANGs as your index play, and you know, they're kind of flat on the year. Probably pulled down by Facebook. I think Netflix and Google have kind of carried the weight this year. But everybody's using that as their index, and I think anybody smart is using these as their index and not the 500 stocks, and then probing with other ideas. But yeah, you're right, Ivan. Like people, the risk on trade here seems to be take your money out of the FANG, right, and probe into small caps and speculative stuff and biotech. I mean, there's just so much working. I mean, now you have a digital parallel market exploding with the altcoins and crypto as well. Bitcoin 57,000, doubled this month. Ethereum doubled this month. I think you're pulling up all the derivatives. I never would have thought that. I never would have thought a second time around people would be this lazy and chase derivative Bitcoin plays like Riot Blockchain. I think MicroStrategy literally makes no sense to me in a world where you can just put some money digitally. But again, there's so much money in for funds that want to do proxies to crypto. They seem to still be using stocks. The MicroStrategy thing makes no sense to me as like an also-ran software company, MSTR, I think, that just borrows money to buy Bitcoin on their cap table.
So is Tesla.
What's that?
So is Tesla. Tesla, I think as of right now, they have about $1 billion in profits. So they're making more money from, you know, owning Bitcoin as of right now than from selling cars.
Generally doesn't work long-term strategy though. People eventually go, we invest in the company for the product, not for their treasury. So if that's the case, Apple's a buy, because all Tim Cook has to do to get a stock up 20% is announce that they're going to put 5% of their capital into Bitcoin.
I'm not sure it's going to work at this point.
And again, I don't think it'll work anyways. I think Tesla has proven that they're not correlated with anything that's ever happened in the markets. You know, it's kind of like a meme company. The more shares he prints, the better the stock does. So, I mean, it's just over any pay grade. This is just a pure passion. You know, people love the product, and he's figured out how to turn his stock, how to break the mold for public stocks, at least this long. I mean, look at the monthly on Tesla.
It's insane. Yeah.
It's defied all forms of, you know, it's a 20 bagger from.
It's starting to look weak though. So if it doesn't bounce soon, it might have a little bit, you know.
I think my thesis is Tesla rolling over if it did, and Facebook rolling over. I feel like Facebook Facebook feels the weakest just because it just feels like the weight of the Chinese apps, the digital apps are just so much better than what Facebook. And then you have Clubhouse kind of working, which Facebook has to clone very quickly. What's interesting too is I was watching Spotify. I've been like, it's one of my 8 to 80 companies. I've been a little nervous because of the Clubhouse. It seems to be more popular than podcasts. But look at Spotify, weekly closing high or monthly?
Yeah. Super bullish.
Super. I mean, forgetting what you think about their margins or whatever, has so many people that don't want to own this stock. And I understand it from a financial standpoint, but from a pure digital brand standpoint, and I've been speculating that, not speculating, I've been bitching or armchair quarterbacking on Twitter that if they bought Clubhouse, it would be game, set, and match in audio because it would get a live social network. And the market cap on Spotify is what, 68 billion. So they could literally pay 10 to 15% a speculative bet. And I don't think they'd have to. I think they could offer 5 billion for Clubhouse, which just seems absurd for a 1-year-old company. But remember what Facebook did to leapfrog Facebook by buying Instagram and WhatsApp and the goggle company. So Spotify is being given a chance here.
I don't think they can compete with someone like Facebook. Like
They can't. Facebook. But in audio, of course they can't compete, and it's not a social network. But by buying a live social network audio product, because they're in the audio business like Clubhouse, and you should try Clubhouse, they could surprise a lot of people and just claim their stake in audio, live and podcast. Anyway, so that's some armchair quarterbacking. The other one I watched last week that I don't think did anything yet is eBay. But as collector cards, and I mean, this becomes a proxy as this collector boom carries on. So no move here. I'm looking, it just looks like it should go much higher. So that was one of my new positions. Anything you're looking at specifically, Ivan?
Well, anything related to the back to normal is just looking the strongest right now. Financials have been super strong. I mean, obviously a little bit extended.
Goldman, like I said, Goldman, the margins that these banks are experiencing from just switching to a Zoom economy, instead of having meetings, and they still get paid their fees for doing deals. They just could do it with much higher margins. And you can see this just showing up in Goldman Sachs. So if we go to the weekly, we like to joke that banks are dead. And for the most part, they are if you're a Wells Fargo or a Citibank. But in a lean kind of, in Goldman's just much leaner and more evil and more smart, and Goldman just looks like it goes to 300-400 in a world where the economy doesn't correct. Bank of America is strong too, but not as strong as JP Morgan and Goldman Sachs. But I say you have to go with Goldman Sachs if you want exposure to banking. If SPACs continue to be a thing. Morgan Stanley also looks phenomenal. Wow, that was a great buy in. Wow, that was a great buy in March, huh? Jeez. I'm not sure what's driving Morgan Stanley.
Everything was a great buy in March, Howard.
What's that? Yeah, everything. No, but I mean, for a bank to quadruple almost, it's pretty impressive.
Yeah.
Anyway, so you can see, I mean, this isn't as good a buying opportunity as March, but everything points to this is still a beginning of like a new bull market. It's just people just don't want to hear that. And I hate to be called a cheerleader, but when you're right, you're right. And fighting this tape is bananas. What did interest rate look like in the dollar, Ivan?
The interest rate continued to spike. The treasuries continue to go down, and those 60-40, cookie cutter portfolios are not looking that great because yes, the S&P is up 4% for the year, but treasuries are down more.
Having a terrible year, yeah, so far. Yeah, the advisors are going to be getting phone calls. That's a really good point here, Ivan. And I kind of sense it with there's a lot of anger in the RIAs because I don't think they can just call their clients and start saying we got to go small cap and we got to go emerging markets. And And so the people that have been nimble, the do-it-yourselfers, you know, you may hate them, but they are crushing their financial advisors. And, you know, even my boring 8-to-8 portfolio, because I added Twitter this year to it for people that follow it closely. And there are people, Charlie runs it for me. You know, even adding Twitter this year in the 40s in 50s recently has been just a boom. The other one is that I added recently is Adyen to my 8-to-8. I've owned it for a while, but I think as Square gets ready to go, and not Square, as Stripe gets ready to go public, you can see this just breaking out, and I think it can go create even a higher multiple. So it's, you know, 80 billion. I think it's a multi-$100 billion brand in Europe and the rest of the world over years in the payment industry. So again, none of these great growth names are cheap. And look at Shopify, you know, another 8-to-80, which, you know, if the world's, I had Harley on my podcast, who's the president, and, you know, I don't know how you stop them. Over 1 million storefronts. If you want to be an entrepreneur, you can be now using a Shopify store. And Shopify is also, I mean, just why Fashology is the trend. If we go around, you know, all my Fashology companies, Peloton, Restoration Hardware, Nike, you know, everybody's a fashion company, right? And Shopify allows everybody. And that's the ultimate Fashology, is we all can sell gear. Here's, you know, my social leverage gear, right? You can just put this, you have a Shopify store, and you can, and, you know, people that have affinity to your brand can go around. We see Lulu and Peloton probably pulling back the most. Where's Nike?
Sideways.
It's acting much better. I think what's interesting here is maybe Shopify and all these like independent fashion and fitness brands take little chunks out of Lulu. I think Lulu needs retail to reopen at this point. It's getting a little stale, but Shopify is really the ultimate Fashology company because it hedges you against, you know, Lulu and Nike getting just death by 1,000 cuts. The other one breaking out was Farfetch, which I said is like a high-end, you know, which I've been long for a while. It's breaking out again. This is kind of a high-end fashion technology Shopify / reseller, and helps high-end independent designers build out their storefronts. And so you can see this could do even better as the market recovers, because as wealthy people start spending, you can see it here. So, you know, you just got to kind of follow the tea leaves, but things look really good.
I mean, don't forget that bull markets correct through sector rotation. So while we see that strength in back to normal stocks, all the leisure stocks, and, you know, some of the high growth stocks, at the same time you can have, you know, sectors pulling 5-10% a week. You know, for example, clean energy had a pretty significant pullback last week. It's obviously still in an uptrend, but this is how bull markets will correct. You know, we can have a 20% pullback in one sector while other sectors are holding.
Yeah, I mean, yeah, it's a pretty healthy after that run, just a little bit wild potential topping, but, you know, you have to assume it'll resume in the direction of the trend. What about looking at healthcare just quickly? XLV and IHI. I think it's XLV.
Breaking down recently. I mean, not in a big way, but definitely showing relative weakness as of late.
But nothing major considering these great runs. Okay. All right. Well, that's it for me. I mean, Farfetch looks the most interesting.
Shopify this week, so let's see if it matters. At this point, Farfetch is just a pure high momentum stock, so it's,
yeah. Well, I think Goldman, eBay, Farfetch. There's just diverse. I mean, obviously the mining, like copper's doubled this year. The crypto.
Yeah, I think Snapchat is looking good again.
Oh wow, Snapchat looks great. Like I said, Zoom looks interesting.
All of the high inflation stocks, I would like those. Potash, agricultural inputs. I mean, they sound boring, but if you go back in time into 2006, 2007, those stocks like tripled, they quadrupled back then. So, you know, it's not a bad idea to, you know, kind of pay attention to some of those weird farm stocks. They're also starting to look interesting.
Okay.
So that's it.
Well, follow along, Ivan. Hit me up anytime, everybody, and have a great Sunday. Ivan, have a great week. We'll hit the beat for a run. And but this week should be an exciting week in markets because it's just quiet and a lot of individual stock activity.
Every week is exciting. All right.
Yeah, every week exciting, as I said.